From Marmo Studio, here's Jim Bratton.
Hi, this is Jim Bratton, and today we're talking to Jacqueline Richardson. She's an enrolled agent, certifying acceptance agent, and your company is called Society of Wealth, correct?
Yes.
All righty. Thank you for joining us. By the way, we're recording this in conference room 206 from Marmo today while we get the studio reworked. Jacqueline, thank you so much for joining us today.
Thank you for having me, Jim.
So today we're going to talk about what it takes to prepare for taxes and record keeping. As a small business, please just lead me through this combination of things, please.
Absolutely. Well, you mentioned my certifications, and so primarily I specialize in representing clients before the IRS. And that's because something has happened and the IRS doesn't agree with the information that you've sent in. And what I've found is that it always boils down to inaccurate bookkeeping. If you can follow the how these things work, your receipts support your books.
Okay.
Somebody's taken your receipts probably from your bank statements, and they have put them into a readable financial statements. Those financial statements support your tax return, right?
Right. Okay. So you got tax return,
Yes.
statement,
Yes.
and on the backside, then receipts.
Receipts. Yes.
So tell me where you'll deal with a lot of small business that have problems. Tell me where the problems come in.
The problems come in either no bookkeeping or inadequate bookkeeping or not having any records to support all that. Once you file your tax return, you sign it under penalties of perjury, and that's where most people don't understand. I'm signing your tax return as a preparer,
Right.
but you're signing the tax return under penalties of perjury, meaning to the best of my knowledge, these numbers are accurate. And I find so many people who either don't read the tax return or don't care about the numbers on the tax return, and they get into trouble later, and the preparer is gone or the bookkeeper is gone.
Right.
So I know we don't have a lot of time, but what I don't want to scare people about not having bookkeeping, but somebody's got to do it. And when you first start a business, you have either more time than money or more money than time, right? Any business. So if you're at the stages where you have more time than money and you cannot afford to bring a bookkeeper on staff at this point,
Right.
you've got to figure out a way to do it yourself, whether it's an Excel spreadsheet. You put a day on the calendar where you're going to work to get your books together, and you do debits and credits so that you know what the numbers are. And then once you can afford to hire someone to do it, then you can pass that on to them. But you need to make sure that that person really understands bookkeeping. I work with QuickBooks Online exclusively.
Okay.
It's not because I'm an ambassador for QuickBooks. It's because they have been in this business for so many years.
That's just what I was going to ask you. If there was a particular set of entry-level software that you suggest.
Yes. There are a lot on the market. A lot new ones came out on the market about 4 years ago. I cannot vouch for them. What I know is that QuickBooks primarily invented online bookkeeping.
You're right about going all the way back to Quicken before you went online. Yeah.
We are required to get certified every year. So there is more accountability, I think, with QuickBooks. Also, you're going to find if you are audited, most IRS agents are very familiar with QuickBooks.
They know where to look for what.
They know where to look, and they know they can see a lot of the QuickBooks has an audit trail, for example. I know that there are probably some very good new softwares out there, and QuickBooks is not cheap. That's one of my complaints. That's one of the negatives I have is that they go up every year, and sometimes it can be unaffordable. And that's why I'm saying that if you're new, you can do this on your own.
They sneak up on you sometimes. And because I use QuickBooks Online as well, and every once in a while I get a monthly that goes, wait a minute, that's a little different. But they do have some beginning. If you look closely, they've got some beginning packages that are pretty reasonable.
Absolutely, they do. But I also trust them. Now, I've actually I've worked with QuickBooks. I've had a contract with QuickBooks where I explained the financial statements to their bookkeeping clients. And while at work, they have a staff of programmers. So they are making fixes and upgrading constantly. They don't just hire somebody to create this bookkeeping software and then, it's just behind the times.
It's not a one and done.
It's not a one and done. So I do feel that there's value there. It's just sometimes that it's not a small business, a new business can't afford it. And so my point is that figure out a way that works for you so that you know that you agree with your tax return.
Suppose somebody just isn't ready for QuickBooks or an QuickBooks product, and they use an Excel or something. Can you give me some just quick guidelines on what columns they should have, even if they don't know what a credit and debit is? Walk me through what they do.
I'm so glad you asked that question because I've actually spoken with many people about that. And what I do, or what I suggest that they do, is to Google Schedule C business return.
Okay.
And then every column that's on that Schedule C business return should be a category. So they'll have utilities, uniforms, rent, all, supplies.
Whether that's a column or a lot, doesn't make any difference as long as it's a category.
It's a category. So you're going to take your bank statement, and you're going to put all those transactions on your bank statement into one of those categories.
Wow.
Now, when you get when your business gets more advanced and you want to have subcategories, that's basically for you, because the tax preparer is going to roll all of those subcategories up, and they have to find a category on that tax return that relates to what you're giving them, if that makes sense.
No, it does exactly. Because we've dealt with all of that. I mean, I understand, and my business is not necessarily typical, but it is in some ways.
Yeah.
You don't know what to call some of this stuff.
Exactly. So the best thing to do is to Google the Schedule C business return form and use that's your starting place.
Right.
You're going to use the categories that are on that form, because those are the only categories you're going to be able to report. So whether you have multiple categories, somebody is going to have to roll those categories up into something that's reportable. Now, of course, they do have an other business expense.
Yeah.
And so that's for miscellaneous things. You wouldn't want to have a huge number in other.
Oh, I'm just saying I'm sure that an oversized other is a trigger.
Yeah. And that's a good term for it.
And I imagine you worked for the IRS.
Yes, I do.
Okay.
I work for the IRS. And
you know the triggers.
I know the triggers, and now the computers know the triggers.
Right.
So quickly, I just wanted to say that many people, once their tax return is accepted, I always tell my clients, your tax return has been accepted for processing, because once it's accepted, that only means that it went through the computer's check to actually get into the system. It doesn't mean that the numbers are right. It doesn't mean that there are no problems with the return. So many people think once they get that notification saying your return has been accepted, then it's all clear. And that could be a mistake.
You don't bring out the shredder yet.
Exactly. Please don't. Please don't. And so, that's all that means, is that it has made it into the IRS's system.
And you're saying, I'm trying to envision any number of small businesses. So you basically say, suppose it's a shoebox full of stuff. Mm-hmm. Just pull that out and categorize it.
Absolutely.
In some format.
Mm-hmm. You keep bringing up all the things I wanted to talk about, because these shoeboxes, right? First of all, no one's going to go through your shoebox but you. So you've got to go through that shoebox, even if you have a tax preparer who's trying to help you through it. No, that's your responsibility. Right. You need to give me a form.
I have to bring you something.
You've got to give me a sheet of paper that you have gone through these receipts. The other thing is that receipts fade nowadays, right? So you go and you buy supplies from Office Depot, and 2 months later you can't read it.
Absolutely. So, that thermal ink.
The thermal ink. Many receipts are electronic, which is great. Yeah. But there are, you go to get paper from Office Depot, and the receipts fade. if you didn't use your debit card. So, cash receipts, those types of things that are not on your bank statement can be a problem. I was in a meeting with the IRS not too long ago, and I actually asked them about that. And they said they were not making any changes or provisions for receipts that fade. And we didn't go into it further, but once I thought about it, it's because software such as QuickBooks, you have the ability to upload the receipt.
Yeah, the assumption is that any business is going to have some electronic data capability.
Yes.
Am I reading that right?
Yes.
Whether it's whether it's like I have sitting here an iPad or a laptop,
yes,
or a phone that you enter stuff on with online stuff with.
Absolutely.
Is it? And I hate to keep dragging you different directions.
That's okay.
But is it safe to assume that a small business should use credit cards for virtually everything, so there's an automatic trail?
Well, it doesn't have to be a credit card. It could be a debit card.
Or a debit card, anyway.
Yeah.
But something that has an electronic trail.
Absolutely. I believe that's the easiest way for a small business who's doing all this by themselves. I absolutely understand it. But that's going to be the easiest way to keep track of. And the IRS still has the right to look at that bank statement and say, okay, I'd like to see that receipt for that computer. Just because it's on the bank statement does not, keep the IRS from actually looking for the receipt. So I'm trying to dispel some old myths, where you could bring them.
These are old wives' tales.
Yeah, where you could, and some of them were true at some point, but before there was so much electronic data, maybe you did bring receipts to your tax preparer. I don't know. I don't deal with receipts.
There was the day, I'm sure, and I could be, I'm thinking of a farm or something. Where you brought your little notebook and a box full of receipts, a cigar box maybe full of receipts, and drop those at the accountants.
And the key word there was notebook, because whether you have, this shoebox of receipts, you have put it in a ledger.
Exactly.
Right? And so it's very easy for someone to take a look at that ledger, maybe tell you that, maybe you should do this a little bit differently. You want to make sure, just to check it out for you before they put it on your tax return. The other thing I want to mention while we're here is that a tax preparer, a licensed tax preparer, is not responsible for auditing your books. We're only responsible for asking you and interviewing you about things that we have questions about, right? So if you have a computer and you paid $2,500 for that computer, in my mind, that's a reasonable thing. I'm not going to ask you about it. But if you bought one computer and it was $8,000, then it's my responsibility to say, can you tell me why you had to buy an $8,000 computer?
Right.
You give me an explanation, which I jot down the notes, and I'm done. So just because another myth is that I send it to my tax preparer and they finish my taxes. Well, we don't audit your books.
I understand. I'm just thinking, just because, in other words, if somebody lies to you, the lie's on them.
Absolutely.
Not on you.
Not on me. Not on me.
So, lesson number 2, tell the truth.
Tell the truth.
It's pretty easy.
It's pretty easy.
But I'm sure, I'm going to ask you this, a very candid question. Do you sometimes have people come in and they tell you something and you go, in your mind, you go, wait a minute, man. This is not real.
I do. Not many, but I do. Most of it is, and I don't, maybe I'm so far removed that I don't understand why people think that their personal expenses are deductible on the business. I don't get that. I really don't know why that is so prevalent in the bookkeeping world, where they go on vacation and they, buy clothes and they go to eat and all of their meals are in their books. And so that's something that I don't really know where that's coming from. It's almost as though they have a hard time distinguishing a business expense from a personal expense. And then they'll ask me, well, I bought a computer. Can I deduct that? Or something that is obviously for the business.
Right.
And they'll ask me if that's okay, but they won't ask me about, buying close or, things like that.
Totally.
Mm-hmm.
You're really hitting on some points. And as a small little LLC myself, it's hard to determine what is work and what isn't sometimes.
Okay.
And I think that blurs for people sometimes.
I understand.
And I could see where somebody be led in their own mind.
Yeah.
Led down this path. So thank you for qualifying that and calling all of our attention to that.
One thing you might think about, and this is not 100%, but if you were working for a company, would the company pay for that? Would you be able to send your receipt to your manager and say, I took my family out to dinner last night. Are you going to reimburse me? That might be, a way to get started. Like, I went clothes shopping, I needed some suits to come into work. Well, are you going to pay me for that? Run that through your head. That might help out a little bit.
This has been just an incredibly interesting, we could go on for a long, long time on that.
Yeah.
Would you like to wrap up with anything, Ken? And
well,
by the way, we can do another episode that continues with this.
Okay.
Well.
Okay, good. What I did want to let you know is that for people who watch the podcast, I am giving a special so that they can come into the office for an hour for free and ask me about their bookkeeping, more specific questions. And I'm going to do that from I'll have to get the dates, but I think it is the October the 21st through the end of October is when I'm going to start after extension season.
Wow. What a delight this has been, and what I have learned, and the categories.
Yeah.
Schedule C.
Yes.
Is the guideline.
Yes. Now, we're talking about independent. We're not talking about corporations. We're just talking about LLCs, sole proprietorships.
Yes, I understand.
It's the Schedule C. Mm-hmm. That just gives you, and those categories are diminishing, but that'll give you a guideline. Now, of course, you can have other categories, but this is just a starting point.
Very good.
Yeah.
Jacqueline Richardson, what a delight to have you. What I have learned, and listeners, I hope you have too. Thank you for joining us. We will look forward to the next episode.
Absolutely.
Thanks.
Let's get it on the calendar.
From Marma Studio, you've been listening to Jim Bratton. This is Sierra Sakel.